Good morning and welcome to another edition of the OFX Currency Couch. As we enter the festive season, we saw some volatility into the close last week after former National Security Advisor Michael Flynn admitted and pleaded guilty to lying to the FBI in relation to probes into Russia's meddling in the 2016 election campaign. That forced some US dollar weakness and uncertainty across the board and a rally in safe haven currencies, the yen and the Swiss franc in particular. But those losses, and the US dollar losses that is, were largely unwound after the GOP and the US Senate announced tax cuts that would see the corporate tax rate reduced from 35% to 20% and short-term or temporary tax cut for individuals as well. And that saw the US dollar drive, and the Australian dollar gave up those rallies through that resistance at 76.30 and settled back into that level around that sort of 75.80, 76.10 handle. Looking ahead this week, the RBA statement this afternoon poses a risk event on our calendar, although we expect they'll maintain the status quo, leave rates on hold, and anything short of an indication that a rate hike is due in the first half of next year will be likely leave the Australian dollar relatively within its current ranges. Instead, we'll be looking to retail sales earlier this morning and GDP numbers tomorrow for a better marker of direction through the short term. Ahead on Friday, we have US non-farm payroll numbers as well. But with those numbers steady throughout the past 6 months, really, we'd expect that direction will come off the back of sentiment for those tax cuts and unfolding Russian investigations. As a side, the Australian dollar remains flat across most G10 currencies, and we'd expect that continue as this shift from commodity-led growth and high household debt continues to plague GDP and real-time growth. For any further questions or direction, please call our dealing teams.